Binance, the largest exchange in the world by trading volume, has faced billions of dollars in net outflows after rival exchange FTX filed for bankruptcy and eroded investor confidence in the crypto markets. And joining us now to discuss is Nansen analyst Andrew Thurman. Andrew, so much news going on in terms of a loss of confidence in the markets, and Binance in particular is being hit. We have Joe Johnson, the brother of the former UK Prime Minister Boris Johnson, quitting as a Binance advisor. An auditing firm, Mazars, which had published a proof of reserves report for Binance and other exchanges, cutting ties with clients in the crypto industry. What are you seeing under the hood on chain in terms of what's going on at Binance?
Sure. Well, first, thank you for having me. But I've long said that I personally feel as if there's a lot of risk associated with the Binance exchange, but the majority of it is exogenous. It's a lot of these things that you just touched on in terms of perhaps the verification of the accounting practices, some of these executives leaving the firm, and the constant threat of these regulatory storm clouds hovering over the exchange. But as you mentioned, when you look under the hood at what's actually going on chain, the entity remains tremendously well capitalized. There's currently 55 billion in various digital assets in reserves. After the collapse of FTX, Binance was one of the first exchanges to come forward with the proof of reserves model, in which they publish where customer deposits are held, and they remain tremendously well capitalized across those addresses. However, they have been in the news recently due to some really rather eye-popping outflows last week. Last Monday, I published a tweet talking about how not only was the volume particularly high in terms of net outflows, well over $1 billion, but it was also interesting to see who was leaving, namely Jump, which is a tremendously well-known and powerful market maker in the crypto space, had withdrawn all of their funds from Binance, or at least a significant sum, over the period of a month, and were not depositing. And in fact, we're taking a lot of BUSD, Binance USD, and depositing that on the Paxos exchange, who is the issuer of BUSD, presumably to redeem. This started a particularly loud and aggressive FUD news cycle where the articles about the outflows led to even more outflows, and in total they peaked somewhere around 6 billion in net outflows on a 24-hour basis. CZ, though, has said that they sort of welcomed the stress test, as he phrased it, and that all deposits remain safe.
So, Andrew, how much of the 6 billion? It's out of how much total?
55 billion in customer reserves.
Oh, wow.
And so they're still well capitalized. They had these outflows. Now they're looking at potentially purchasing, or they've seemed to have had an accepted offer for about $1 billion Voyager's assets. Does that change anything in terms of capitalization? Does it make them weaker or stronger? How do they get the funds? Which is one question people have been asking, that, okay, they've had these outflows. Where are they getting the money right now to buy this? How would they potentially be paying for it? And what does it change when it comes to their financial health?
The short answer is, frankly, that we don't know. Proof of reserves is very useful, and it's an important step that a lot of members of the industry have taken, I think, essentially of their own volition. To a certain degree, it became because customers demanded it, but they chose to publish these addresses where we can see customer deposits. Aside from that, Binance is a tremendously complex entity. We don't, CZ, their executive, is famously squirrely about, even saying where they're headquartered, where they're incorporated, or claiming that they're not headquartered anywhere. So when it comes to their financials, it's still very much a black box, despite the fact that they've published, and we now know, about 55 billion in customer deposits on chain. Aside from that, we don't have much on chain or any kind of financial access or transparency into their entities.
What if you could also shed light on this Substack from Dirty Bubble Media, their investigative sleuths in the crypto world, very critical of the space. They're raising attention to addresses linked to Tether between Binance US and Binance, and suggesting that there could be potentially a commingling of funds or something going on in that realm. Any thoughts on that?
Only briefly. I looked at a handful of these exchanges. I think, again, throughout the week, anything that was happening at any centralized exchange was, it led to a very loud negative news cycle. OK Exchange, over the weekend, they paused withdrawals, and this caused people to panic. In the aftermath of FTX, perhaps rightfully, whenever there's anything going on at a centralized exchange, people get extremely worried about it. In my personal view, I think that some of these transfers between Binance and Binance US, the noise around them might be a little bit overblown. Transfers between exchanges are not uncommon, particularly when it's a market maker moving large sums of stablecoins. In fact, during the outflows last week, we saw Wintermute, we saw SCP, and we saw, I believe, Ledger X, and even Justin Sun made an appearance transferring huge sums of stablecoins from other exchanges into Binance. And here, just because there's been a transfer of stablecoins between a Binance address and a Binance US address, it doesn't necessarily mean there's any impropriety or commingling of funds. It could just be a user transferring a large sum of stablecoins.
What you mentioned that they have 55 billion in assets. What do we know about liabilities? Obviously, you say it's well capitalized. I think for people watching this and trying to understand what do you mean by well capitalized? How can you see the liabilities against the assets that we see moving around?
Well, shortly, you can't. Again, proof of reserves is a very, it doesn't give you the full picture. It's not a full audit, and apparently because Mazars dropped out, we're not getting that anytime soon. But it's important to think about Binance in the context of FTX. If an exchange is being run properly, you can't really have a run on the bank because customer deposits are supposed to be backed one-to-one, and this is what Binance claims. Even with $6 billion in net outflows, when FTX had to halt withdrawals because they could no longer honor them, they were about 1/10 the size of Binance, and they saw $1 billion in net outflows. I think in order for Binance to be truly stressed, if there is something going on under the hood where they're commingling funds or they're misusing customer deposits and they can't honor all withdrawals, you would have to see somewhere around $12 billion in net outflows for them to be stressed the same way FTX was prior to them halting withdrawals. So if you do assume that Binance is, acting with some kind of impropriety or illegally, then we haven't yet seen the amount of pressure on the exchange in terms of their reserves that would lead to, a catastrophic halt of some sort.
What about BNB token? Because the initial downfall of FTX was when CoinDesk published Alameda Research's a balance sheet and found that a lot of what their value was based on was FTT, their native exchange token to FTX. And so they were creating value, leveraging and collateralizing based on their native exchange token. Is that also a danger with BNB? And in addition to that, it was FTX and affiliates that mostly owned FTT and created that value out there. It was very illiquid. Are those concerns similar with BNB? Where does BNB get its value from? Are people using it? Do you see any on-chain data on flows in either direction?
Sure. Well, first off, BNB is a very popular chain. There's a lot of activity there. There's a lot of DeFi activity there. Frankly, there's a lot of shitcoin activity there. It's a little bit of a shitcoin casino, but in terms of daily active users, in terms of traffic volumes and all that, they're among the most popular smart contract enabled chains. So I don't think that there's any question that there's real activity there. Of course, Binance is a tremendously important patron of that chain. To say that it is a fully independent technological entity, I think would maybe be a little bit of a stretch. But we ultimately don't know how BNB is being used by Binance. The thing that got Alameda and FTX into trouble was that Alameda was using FTT as collateral on a lot of loans. We have no idea what the liabilities are on Binance's side or how BNB plays into that. I would say, though, that at least 18 billion of that 55 billion in reserves is denominated in Binance USD, BUSD. Despite having Binance's name on it, it's in fact issued by Paxos, which is regulated in the state of New York. It is a tremendously well-regulated entity with monthly attestations for the backing of that 18 billion in stablecoins. So we know that there's at least 18 billion in real dollars there, even if you discount the value of all the various digital assets in aggregate that Binance has.